So let's jump into a more detailed look at top-down analysis, and I'm going to call this a refined top-down. So essentially, what refined top-down is where we are going to work our way down from these, higher time frames as we spoke about in the last video, and then we are going to do, as it says, refine the entry based upon multiple time frame analysis. So if I take USD CAD here, for example, you can see some things that I've marked up very briefly where I have a double top up here. So eventually, this may act as a potential target for liquidity. If I long the market up there, I can swing to those highs. But however, I want you to focus on, this bit here where we've been at a, steady decline in the market from, March 2020. And now we've got right through to now, well, the bottom looked to be like 27th of May 2021, for example, right? So you could see from a top-down perspective, we were taking shorts in here because, we were making lower low, lower high, lower low, lower high, right? Now, once we had, broken sort of this area here, we had, had that shift to the upside, right? So we were looking to sort of start taking long positions as long as they kept giving us entries. Now, when I talk about refined top-down, I want you to focus on this bit here. I'm going to pull back in time, and I'm just going to focus on this portion here where we have this like triple triangle top thing here. I don't even know what you call this, head and shoulders pattern, as most retail would call it, right? So in here, you can see we sort of had, it's a higher high, higher low, higher high, higher low, higher high, right? But, at this point here, sorry, this was not a higher high, my bad. At this point here, when it does not make the higher high, right, something would have went on here, right? So this is where I'm starting to now refine my entry, because at this point, I know something is about to occur, right? So remember, all time frames have their own little narrative and story, like we spoke about earlier, right? So on the daily time frame, yes, this broke higher, but do you see here on the 4-hour time frame, it actually broke, lower than these lows here or whatever, however you sort of see that. So this is how you're able to use multiple time frame to your advantage and take trades both ways. So you can see on the 4-hour, we actually make a steady decline, back up, we mitigate this. If I put this as my already mitigated color, right? And then look, right? Boom, it breaks the institutional candle that pushed us up in there. So now we have our new high, and we have, a potentially new low down here, right? Now, do you see how we highlighted the high that got you under there, right? So now this is what we call our refined top down, right? We start going into each and every single time frame to sort of refine the entry. So as it approached, you can see I had this area here marked up as well, and this area here. Now, one thing to note, I'll go into another video in detail about this, is these are both valid entries to take sells from, but one will hold more weight than the other. Obviously being this one here, because it's higher up, this acting as liquidity, and this acting as a proper entry to continue shorting down, right? Always about cause and effect. What did this do? Nothing. What did this do? Ran a little high, continued dropping, right? So you can see market comes up into there. And as I continue to refine the entry down and down and down, right? You can see back up in here, right, it's hit that area. Let's say we haven't, got in there yet, and we haven't actually been activated into a trade. Well, you can see that as we come up in there, we had, these drives up into that area. Then we had a break of major lows that pushed us up in there. And then we had it pull back up into previous highs before continuing down, right? As well, once we had that next break of structure, what does it do? Comes back up, maintains the high, and continues down, right? And then you can see from order flow perspective, market gives you multiple entries, right? So if this allows me to go down to the 5 minute as well, you can see what happens. as we come back up into here, what happens up here? London session opens, market breaks through. Then, how do you find another entry? Well, you're going to refine this again. Look right here. You have this whole push up here. I'll pull this across, all right? You have that high that gets taken out, and then you have the break structure to the downside. So market pulls back up into there, you take an entry, pulls back, comes back up into here, take an entry, pulls back down. So this is that now refined top-down analysis where we worked our way down from the top on the daily time frame, and we got short on the market based upon the lower time frame. So refining your entries is super important if you want to maximize your risk to reward ratios. Because running a 50 pip stop loss, for example, on taking a daily candle, you're not going to get as good risk reward as if you had like a 5 pip stop loss and you swung that down, right? Same thing as if we look down here into this accumulation that occurred, right? If I go to the 1 hour time frame and I go back and I point this out for you guys, right? You see this is a very clean accumulation. You had these 3 lows, right? 1, 2, 3, and this massive breaker structure. Now, remember, trend liquidity right here. This is the extreme low. As long as this doesn't break, we're still good to go higher. So market comes down to that last POI there, taps it off, and continues going back up higher, right? Now, how do we do refined? Let's say you don't get that entry, you missed it, right? Let me pull back and show you exactly how you could have taken another entry. Let's go 5 minutes, right? You know the narrative now. You know we're looking for longs because we have this mitigation play here. Next 2 days sort of occur. You're waiting for the market to print you a sign that it's going to go higher, right? Cool. So up in here, you can see we're still challenging these lows, right? Until we sort of shift. So, you had this high here, give you this low, pull back, mitigate, keep going. You now need a break of this high to show you it's bullish again, which you got it on this move here, right? So once that had occurred, you can see we were now trending back to the upside, all right? So once you were trending back to the upside, you would identify, okay, where is the next area I want to take a buy from so I can get into a trade? So if you look into the 1 hour time frame here, you can see this as being the last push down, this whole thing here, right? Market comes back in and continues back higher. Now, how did you know that this was, the area, right? You can see this liquidity that was built up here, right? They built a support. They built a support for you here, right? Market makers built a support and they pushed market lower to tap in and continue higher, right? Like we said, we don't want to run that really big stop loss. So what are we going to do? We would wait for the market to show us a sign to enter. And as you see, it slowed down here and you got entries. Let me see if I can't get the 1 minute. Let me go back. I will try get a lower time frame. That way it's easier to show you guys. 3 minutes should be good. Right, back down in here. You can see clearly what happens here. Right, you have the market start to decline. This is being my high because this high pushed us lower. See that really big push up, then it pushes down. So as soon as I get above this level here, we can look to take trades. And you can see we use this as the low. At no time does the market invalidate this structure. Pushes back up, then what does it do? Comes back to this down candle. You get another move back up, then what does it do? It comes back down into this push here, keeps going, pushes back up. Then what does the market do? Comes and taps this candle off, right? Keeps going. What does it do? This is the one that's holding up this weight here. Potentially another entry there, right? So you can see the market kept giving you entries to keep buying this up. Even into the next day here, right? Into the next day here. Look, you have this on London open, market declines, giving you a low that pushes you higher. Mark out this 3 minute candle here. and then boom, like market taps you in and keeps on going up. It formulated, a set of liquidity here that needed to get rent out, as well as trend liquidity here that needed to sort of get taken out, and the market continues going higher. So understanding that, we were buying back down here and we were targeting back highs up here. Now, how come we were buying here and selling here? Because we were just reading the story that was being told, right? Because like I said, on the daily time frame, yes, we broke here, but on the 4 hour, we broke under. Then on the 1 hour here, we broke up in a pullback in this area here. So if I had measured this whole thing, you can see we were sitting at like 50% and we formed an accumulation. And then we pushed up higher. So understanding these concepts, we're able to identify potential areas to take trades. So refining your entries is super important to get those tighter stops.